Good evening, all. Ira Epstein, and here we are with your metal market wrap-up, your weekend edition. And this edition is for Sunday. And we're now at about 6:10 p.m. Central Time. And this is the 17th of November, 2024. I've done a special report on stock indices, but one thing only. What happens post-election, seasonally speaking, and when I say seasonal, I explain it between election date and 30 days out in trading days, not calendar days, in trading days. And I walk you through the 96-year period, 50 years, I think 25, 15. I bring you all to it, and I show you a key point in time in that report that you might want to look at. In fact, I show a couple of the indices. And in the report, you get a chance to use the same software that you see me using for free. That's the first thing. Then if you decide to subscribe to it, and it's not my product, I worked out a deal with SeasonX for you, you get a discount. So a nice discount. So I think you can work with that and see if you like it. You go to iraepstein.com. You can move your cursor to the top as well, and that is exactly how you get to the report. On the top part of our webpage, as soon as you go there, you'll see Stock Index Report. Give it a click, and away you go. Pretty simple. All right. So now let's talk the marketplace. Well, as you know, the one thing that has wiped out the gold market, and that's the right term, has been the strength of the dollar index, pushing up near the 107 level. Interest rates have been climbing, and tonight again, just so you can see, they are still climbing with yield. We saw that Fed Chair Powell made a statement that there were no race to lower rates. The word remarkable was used with how strong the labor market is. To me, those aren't the things that says that the Fed has to cut rates. And we have gone from last week a reading of 83% of the swap trades looking for a cut to now about 60, 61%. So traders are still looking, and I think you got to keep your options open because you're still going to get the PCE report later this month. You're then going to, and that's one of the Fed's favorite indices. Then we're going to get two more. Let me take that back. Two more inflation reports, but one's PPI, one's CPI. We get the jobs report at the first week of December. There's so much coming for the market. They're trying to say, oh, it should be 80% probability to do it. Nonsense to it. Right now, I'm still in the camp that is saying, I don't know. If you had to push me, I'd probably say they don't cut. And why? Because I'm still seeing the strength. And why would you cut if inflation is giving you a problem? You're in the last sticky mile, labor's strong, do you have to cut here? That becomes the big question. All right. When we look at the gold market, you can see it has slipped back for the month so far, and we're mid-month. You're down 6.28% or 6.29. That's a lot. It's not a little bit of a break. The market has fallen back right where I told you I thought it was going to go, if it wanted to go on the weekly chart down, to find support at the 2580 level. When you take a look at what the chart looks like, it just fell out of bed. Did I expect that? No. I thought that Trump would bring in with it more inflation ideas, and instead the market pulled it because interest rates climbed in the dollar. You never quite know, and that's what happened there. Higher high, lower low, the chart's got a lot of damage. So do I think over time inflation's going to return and be a problem? Yes. Do I see this on the chart that says, oh, go in and buy it because that's going to happen? No. I see neutrality. The market's at the 18-day average and hanging in there. When I look at where it peaked right against the upper Bollinger Band, as it so often does, and momentum is turning down. The market is working off now an overbought condition. That is how I'm going to view it. The gold-silver ratio is pulled back to the point where you're slightly underneath here, and if you stay under that, Then we've got the silver getting stronger than the gold. When we came in today, the orange color was correct. Now I'd be changing it to silver because silver is acting a bit better than gold. It's hanging right in against also its 18-day average. It too is correcting an overbought condition. Copper is down to the combination of the 200-week, the 100-week, the 200's in gray, the 100 in green, by the way, if my fingers were wrong there. And here's the 18-week resistance. You're oversold. The market needs China to say something if copper's going to recover. And I'm not seeing that recovery in a big way. In the platinum market, like so many of the other metals, if world economies aren't picking up, why do you need all this? And again, once more China in that mix, and the dollar strong hurts metals. They're priced in dollars. When they go up, it's harder to buy them, and that often is the case. So you put this together, dollar bullish, stock market's in a correction mode, bonds and notes still pushing to the downside, the metal market's feeling that pressure, and this is the first correction that we have had since the election. It's 2 weeks or so into it now, so we'll see just what happens. I think this is the third week we can call the correction now taking place. Again, if you want to see what I have put together for the first 30 days after the election date and trading days, and I go back and I show you what that does, and I show you how you can get this software so you can do it in gold, silver, apply these all your own. Go to iraepstein.com. You'll see on the very top left my report, my metal report. You sign up, and in it, it tells you how to do it all. It's a video. You can move your cursor up here as well. There'll be an icon that takes you to that page. I'm Ira Epstein. You have yourself a great day, and I will catch up with you all first thing in the morning, Monday. Take care.